The recession just started. Crypto and NFT market update. Are you waiting for the recent data of crypto and NFT? What is it going to do? Why is it going down right now? And how has the recession started? We are going to discuss all these things here. Hello friends, welcome back to CryptoTrends. Today, we are going to talk about the current market trend of crypto and NFT. So stick with the video and make sure you watch it till the end to understand the whole market. According to research by a specialized news publisher called Bankless Times, the keyword purchase NFT has seen its score go all the way down to 12 out of a possible 100 since the beginning of June. This represents a decline of 88% from its highest score of 100, which was recorded in January. Just following the trend, like investing in an NFT because everyone else is doing so, would bring more damage than good in the long run, merchants said. In the long term, it's better to buck the trend and go against it. Since the beginning of this year, there has been a constant decrease in the search interest for purchasing non-fungible tokens, or NFTs, which signals a time of consolidation for the digital asset class that has performed the best over the course of the previous year. Let us look at it in a little bit more detail. According to research published by DAP Radar, the amount of trading volume created by the NFT market in May was $3.7 billion, which is a decrease of 20% from the amount that was recorded in the month before. In the NFT markets, a growing amount of fraudulent activities, including as pump and dump strategies, phishing schemes, bogus profiles, and rug pulls, are coming to light, according to industry experts. Since the failure of the Terra stablecoin a month ago, cryptocurrency markets have been on a roller coaster, but the biggest fear currently in crypto land and other financial markets is the acceleration of global inflation, signaling that the ride will likely continue with white knuckles. Despite the fact that the values of most major tokens increased by around 5% overnight, those gains were rapidly erased during trading in Asia, with Bitcoin losing 5.5% and Ethereum losing 11%. Bitcoin's value has dropped by almost 55% since the beginning of the year, and it was trading at $20,592 at the time of this video. The market for non-fungible tokens has not been immune to the downturn either. The financial markets have priced in a rise in interest rates by the Federal Reserve of the United States of America by 50 basis points at its monthly meeting that is taking place today in order to curb inflation. Following the release of the Consumer Price Index on Friday, which showed year-on-year inflation in May at 8.6% in the United States, its highest level in 40 years, there is now widespread speculation that the Federal Reserve may hike interest rates by as much as 100 basis points. Want to know more about how Bitcoin and Ether are taking the brunt of the market sell-off due to concerns about a rise in the Fed rate? Well, let us take a look at these things now. Since the Fed already holds billions of dollars worth of bonds as a result of quantitative easing, moving too quickly may cause debt repayments to balloon, which presents a tough balancing act for the Fed as it attempts to prevent the economy from entering a recession. According to Andrew Sullivan, a market analyst and former equity broker, the Fed wants to try and show steady progress rather than bring in a moment of shock and awe to the market. This statement was made in reference to the Fed's desire to avoid bringing in a moment of shock and awe, because as we saw on Friday, if that occurs, the markets tend to fall, and that's not good for anyone. The reason being that if that happens, the markets tend to crash. According to the data provided by CoinMarketCap, the cryptocurrency market cap experienced a decline of approximately 25% over the course of the weekend following the publication of the CPI data. As a result, the market cap dropped below $1 trillion for the first time since January 2021. The stock markets were also hammered particularly hard, with the S&P 500 index seeing a plunge of 3.9% on Monday, therefore confirming that it has entered a bear market. Raising interest rates is the primary instrument that central banks have at their disposal to battle growing inflation. This is accomplished by raising the cost of borrowing money, which in turn helps to cool an economy that has become too hot. Market participants are focusing on what Federal Reserve Chair Jerome Powell will do today, but they will also be paying attention to what he signals lies ahead. According to Sullivan, a lot of it will come to how Powell explains it. Powell has been extremely effective at trying to offer forward guidance so that the markets don't get agitated. Investors who are still reeling over the collapse of the Terra stablecoin, which was believed to be worth $40 billion, face the possibility of a repeat performance when another algorithmic stablecoin, USDD, lost its peg to the US dollar. The collapse of a dollar parity was the first domino in the series of unfortunate occurrences that culminated in the Terra fiasco in early May. The Tron Decentralized Autonomous Organization, or DAO, said that it has restored $500 million in USDC to its reserves, which had been off their peg for about 2 days. This move was made in an effort to restore the USDD's parity to the US dollar, which had been lost. On Monday, the inventor of Tron, Justin Sun, said that he is establishing a $2 billion fund to protect the currency. However, as of the time of this video being published, USDD was trading at $0.9635. The cryptocurrency staking and lending platform Celsius Network put a hold on all users' withdrawals, swaps, and transfers on Monday, claiming severe market circumstances as the reason, as if the market didn't have enough trouble. The network said it was working on the problem as rapidly as it could, but it did not provide a time estimate for when it would allow transactions to resume. The volatility of the cryptocurrency market is also having an effect on the market for non-fungible tokens, or NFTs, as seen by the sharp decline in sales numbers for the month of June. According to the NFT data aggregator CryptoSlam, sales for the month of May reached $3 billion, but as the halfway point of the month of June, sales have not yet reached $500 million. Since August 2021, the floor price of a Bored Ape Yacht Club NFT has been below $100,000, making this the first time since then that this has happened. The current floor price is set at 78.5 ETH, which is the equivalent to around $88,500. Yehuda Petcher, an NFT relations strategist for CryptoSlam, said in an interview with Forecast that he does not personally know anybody who is now shopping for NFTs. "I don't know anyone right now who's actively shopping for NFTs," Petcher said. According to what he stated, "I don't think the majority of NFT ventures are going to survive this weak market. If there's a huge one, I believe this is it." But what should we make of Bitcoin? Ben Caslin, head of research at the cryptocurrency exchange AAX, said to Forecast that he maintains his optimistic stance on Bitcoin since the cryptocurrency has repeatedly shown that its foundations are good. According to him, the conflict in Ukraine has shown that it is resistant to government constraints, while the narrative that it is an inflation hedge will win out over the long run, particularly following times of heightened inflation. According to Caselin, we will see some dominance return to Bitcoin, and we will see several altcoins die out, and he says this will be for the best. According to a report published on Tuesday, there has been a significant decline of 88% in the number of Google searches for buying NFTs. This decline comes as mayhem continues to spread across the cryptocurrency market, whether it be cryptocurrencies or blockchain-based decentralized finance, or DeFi. So, I think we're done with this video here. Let us know in the comment box, what do you guys think about all this? And next, where will this trend go? Make sure you comment down below and tell us how much you have analyzed with our video. So I hope you enjoyed the video, and if you did, please give it a thumbs up, smash that subscribe button, and press the bell icon so you'll never miss any update. And if you have any further questions on your mind, let us know in the comment box. And also make sure you check out our channel where you'll find more really cool stuff.